What is going on, guys? Welcome back to the channel. My name is Matt, and in this video we're going to be talking about how the US inflation numbers came in yesterday, what this means for the future of Canada's housing market, how it affects Canada, and also another topic later on we're going to talk about is, are borrowers gravitating towards mortgage brokers at time of renewal, and what does that process usually look like? So US inflation data came out yesterday. The US Consumer Price Index report shows inflation slowing to 3% in June, down from 3.3% in May. So this was an unexpected drop in inflation and has led to a lot of speculation about whether the US Federal Reserve is potentially going to be cutting rates soon. Now, obviously, we have to talk about the impact on Canada, right? Due to close economic ties of the US and Canada, US monetary policy changes often influence the Bank of Canada's decisions. Historically, both banks have mirrored each other's interest rate changes, and lower US inflation could lead to similar expectations for Canada, right? It's kind of like when the US sneezes, Canada catches a cold. So we are very much in line with their policy decisions. All right, so to look at some expert opinions, Penelope Graham from Rate Hub notes that the recent US inflation data could increase optimism for a rate cut in Canada. She emphasizes that the historical trend of Canada's economic policy being influenced by the US. Has Canada made good progress on controlling inflation? Canada has made significant progress in controlling inflation compared to the US. This progress was reflected in the Bank of Canada's rate cut in June, and the Bank of Canada's previous measures have aimed to stabilize the economy and control inflation effectively. The positive news from this US inflation announcement has impacted financial markets, and it's leading to falling Canadian bond yields. Lower Canadian bond yields translate to lower fixed mortgages for Canadian consumers. So if those bond yields keep coming down, then we're going to have lower and lower fixed mortgage rates here in Canada. Market expectations are adjusting based on these changes, impacting investor decisions and consumer confidence. Here are the important indicators to watch coming up. Canadian inflation report on July 16th. This will be crucial in determining the Bank of Canada's next move. Other indicators such as employment rates, GDP growth will also be considered, and monitoring these indicators can provide insights as to what the bank's future moves will be. The next rate announcement for the Bank of Canada is going to be on July 24th, so that's the next date, and I'll be talking about that on this channel. And analysts, investors are watching signs for a rate cut, but it might be a hold. The other topic we're going to talk about today is, are mortgage borrowers gravitating towards brokers at time of renewal? So there's definitely been an increase in broker use. So in 2022, Mortgage Professionals Canada reported a significant rise in broker market share, increasing by 5% to reach 34%, indicating a growing preference for brokers among mortgage borrowers rather than just going to their bank. Homeowners are considering switching lenders at renewal time. About 25% of Canadians are likely to seek a different lender when their mortgage comes up for renewal, especially if they can get a better deal. Several factors drive borrowers to shop around, obviously. Dissatisfaction with renewal rates, positive experience with brokers are the key reasons behind this trend. And when you think about it, brokers will definitely give you better service. They offer you more options, and they do save you money. And the best part is you don't even have to pay for them, right? Brokers get paid by lenders at the end of the deal, right? They get paid a finder's fee. All that comes free of charge for a borrower. And it always makes sense to talk to a broker at time of renewal, because typically when you get that letter from your lender saying, okay, these are the next terms, usually they're above market rates. So you always want to check with your broker and determine the best possible path for yourself. Now let's talk about challenges that borrowers are facing, right? So borrowers face higher renewal rates right now, but many are prepared for this due to extended amortizations and the mortgage stress test. So these factors help borrowers navigate the changing market conditions that we've been seeing recently. And obviously we talked about the benefits of using a broker, but multiple lenders, we can negotiate better rates. We offer personalized advice tailored to each client's financial situation. So I'd love to know what you guys think just about the recent US inflation data that came out yesterday and how that impacts the future of interest rates for Canada and the US for the rest of the year. And also at time of renewal, are more and more people just going to brokers for the better service, better options? Do you think this trend will continue? Do you think banks will lose that market share over time? I personally do believe that brokers will continue gaining market share. It's been the trend over the last 5 to 10 years, and I believe it's going to continue. And of course, if you need help with financing, buying or selling real estate, I would love to help you out. I will leave all my information down below. And if you guys enjoyed this video, please give it a like. Helps me push this kind of content to more people. And until the next one, guys, take care.